Okay, we'll start back with G. It reads production costs transferred from the spinning department to the tufting department. You guys, the spinning department is the first department. Of course, the tufting department is the second one of two. So when the carpet has made it through the spinning department and it's ready to be transferred, we transfer its cost along with it. So to do that on G, we're going to debit our work in process tufting department account. And we're going to credit work in process spinning, because we're moving the goods out of work in process spinning department and into the work in process tufting department, and that was $88,000. Okay, then on H, we have a similar situation. Now the goods have made it out of the tufting department, so they're now part of finished goods inventory. So we want to debit finished goods inventory. On H, production costs transferred from the tufting department to finished goods, $159,000. The account to credit is going to be work in process tufting department, as the goods are moved out of the final department and into finished goods. And the credit is, of course, for $159,000. Okay, then on I, they tell you which ones out of our finished goods were sold. So we're going to debit their cost to our expense account, cost of goods sold, and we're going to credit finished goods inventory. And they give us the amount here as well. $160,500. And that takes care of the first instruction. Now we're going to post to accounts that are kind of like ledger accounts that serve the same purpose. I just call them a makeshift ledger. Your book calls them T accounts. I just have them labeled as accounts here on your Excel template. I went ahead and entered the beginning balances before materials. It's given on bottom or at the very start of the problem. The materials balance at the start of October was $4,800. Work in process inventory for the spinning department, $1,500. On October 1st, work in process inventory for the tufting department was $2,300, and then finished goods, where the balance there was $5,600 to start the month. Now we want to update this month for the October transactions. Well, here we have all the October transactions. They're just wanting ending balances for all of the work in process accounts and factory overhead accounts. Okay, so we'll start with a debit to the materials inventory account, $84,900. And that's from A. Okay, we're not working with accounts payable in this particular problem. They're just wanting us to update the inventory accounts and the factory overhead accounts. So we'll do work in process inventory for the spinning department. It's a debit for $43,600. Okay, and then on B we'll also debit work in process inventory for the tufting department $34,100. Okay, then we're going to debit our factory overhead accounts. For the spending department, that amount was $3,200. For the tufting department, the debit to factory overhead tufting on B was for $2,900. Okay. Then we will credit materials inventory for the 83.8. On B. Then we've got a debit to work in process spinning for 26.3 on C. A debit to work in process spinning on C for 26.3. We'll be debiting work in process inventory for the tufting department on C as well. Let's go pick up that amount. 17.9. Okay, we'll also be debiting our factory overhead accounts by department on C. I believe that was for indirect labor. $12,100 for the spinning department. And then for the tufting department, $11,700. And then we're not keeping up with wages payable here. We're just looking to update the inventory and factory overhead accounts. So on D, we have a debit to factory overhead spending for $5,300. Okay, on D, we're also going to debit factory overhead for the tufting department, $3,400. Okay, we pick up accumulated appreciation in the financial accounting department, you guys. Well, there'll be some crossover, but here we're just keeping up with the managerial accounting accounts. The crossover accounts, of course, would match on the financial records and in the managerial accounting records. But we have a debit to factory overhead for the spinning department for $1,200 on E. A debit for $1,200 to factory overhead spinning on E. We're also going to debit factory overhead tufting for $1,000. Then we'll move to F. We debit work in process for the spinning department, $22,000. We're also going to debit work in process for the tufting department on F for $18,700. Okay, then on F we're going to have a credit to the factory overhead spending department for $22,000. That's our estimate of overhead. These are our actual factory overhead costs. Our is difficult for me to say for some reason. These are the actual factory overhead costs. This is our estimate. We hope they come really close to equaling out, you guys. We don't want to overestimate or underestimate by too much. Okay, now I've been talking. Let's see if I can pick back up where I left off. We're going to have a credit to the factory overhead tufting department as well on F. For $18,700. We'll go to G. On G, we have a debit to work in process tufting for $88,000. Now there we were moving goods into work in process tufting and out of work in process spinning. So here we've got a credit on G to the work in process spending account for $88,000. See it over here. We debited work in process tufting for $88,000. The credit was to work in process spinning, and that's what we brought over here. Debit to work in process tufting department, credit to work in process spinning department on G. Now the goods are going to move from the tufting department into finished goods. So on H, we're going to debit finished goods inventory for $159,000. And the credit will be the work in process inventory for the tufting department. The goods moved out of tufting and into finished goods for $159,000. We'll go back and look. The credit's going to be the work in process inventory for the tufting department. Alright, then we'd have a debit to cost of goods sold. No, we're not using that account in our ledger here. The only other inventory account we need to update is our credit to finished goods inventory for $160,500. And that's on I. Now, let's go through and get a balance for each account, you guys. What I like to do is total both the debit side and the credit side, and then get a balance on the side that's larger. It's going to be a moot point where we only have one entry on the credit side, but I'm going to total both sides anyway. Well, let's just go ahead and determine the balance as we go. Okay, here the balance is going to be, I'm going to double underline here. Let's make it look neat. The debit side's larger, so I'm going to say the $89,700 minus the $83,800. Leaves us with a debit balance of $5,900 in materials inventory. Okay, so I total both sides here. Again, the debit side is larger, so I'm going to say the debit side minus the credit side. The difference is $5,400, and that's going to be my balance. And I'm going to put the date in here. This is going to be the October 31 balance. Okay, let's sum these. I don't know why, but I have to have these all looking really nice and neat for some reason. Okay, we get a larger total on the debit side here as well, which makes sense, you guys, on all of these. All of your inventory accounts anyway, they are asset accounts, so we would expect them to have a debit balance. So we're going to say 161,000 minus the 159. Of course, that's going to be $2,000. And that's the 10/31 balance. Okay, let's keep moving. Let's total these up. Debit side again is larger, as we would expect. So we're going to say debit side minus the credit side, and that's $4,100, and that's our October 31 balance. Okay, now let's get to our inventory accounts. We'll talk about these a little more. Okay, now here our balance is a little bit larger on the credit side. What does that tell us? If we end up with a credit balance in one of these factory overhead accounts, you guys, what's on the credit side? That's our estimate of what we thought factory overhead would be in the spending department for the month of October. Our estimate or credit balance is larger than the actual cost or the debit balance. So we overestimated or over-applied overhead. Your book calls it over-applied. In all accounting text, we'll call it over-applied overhead. Really though, applied, just in this case at least, means the same thing as estimated. What this means is we overestimated factory overhead in the spending department by $200 for the month of October. It's really good. If you get within 200 on 22,000 when you're estimating inventory, that's a great job. Okay, now let's sum these. And that's said to be, let me write it in here, over applied. I don't want it all caps though. The term over-applied is used for a credit balance. That just means that we overestimated overhead for the month of October. Okay, let's see how it went over here. Alright, here the debit balance was a little larger. That means our actual costs were more than our estimate of $18,700. So that means we underestimated overhead in the tufting department. Your book doesn't call it underestimated overhead though, instead it calls it underapplied. So if you end up with a debit balance in one of your overhead accounts, it was underestimated or underapplied. If you end up with a credit balance in one of your accounts, that means it was overestimated or overapplied in that situation. Alright, thanks you guys. After working this one with me, I don't think you'll have any trouble with the B problem. If you have any questions about it or anything else, just be in touch. Thanks a lot.